Breaking news, everyone, coming out of Harvest ETFs. What do I feel like I've said that recently? But Harvest just announced preliminary prospectus, which means that these ETFs will be out maybe 4 to 6 weeks or something like that. So they're going to be launching the Canadian Harvest high income shares. So these are going to be essentially Canadian companies or a Canadian version of the existing high income shares, right? So they're going to be launching 10 of them. So these are single stock covered call ETFs, basically, everyone. So on the other side, for the American stocks, they came out with 15 of them, right? Costco and Lilly and Nvidia and Coinbase, Strategy, etc. And then they have an all-in-one HHIS, which is very popular. So on the Canadian side, they have launched 10 single tickers, and they're also launching an all-in-one. I'm happy to see that all of them have covered calls up to 50%. Everything is the same. The strategy is the same. The management fee is the same, right? 40 basis points. Here's one of them, for example, Agnico Eagle, which is a gold producer, 40.4 management fee. Cover calls on up to 50% of the portfolio and 25% leverage. So let's go through the stocks that they selected in the Canadian stock market. These are Canadian stocks. So the first one is Agnico Eagle. So this is a gold producer. You have Bell. You have Cameco. This is the only one I had to look up. What is Cameco? I don't even know if I'm pronouncing it right, but it's actually a uranium company. And if what Google says is true here, it's the world's largest publicly traded uranium company, which is very interesting. CNQ, which is Canadian Natural, which is a big oil and gas producer. Enbridge, biggest pipeline. Royal Bank of Canada, biggest bank. You have Shopify, so we actually have one technology stock in here out of the 10. Suncor, oil and gas again, producer. TD Bank, TELUS, and HHIC, which is going to be the all-in-one. So it's literally going to be the Canadian equivalent, if you will, of HHIS, right? So it's probably going to have, I'm guessing here, but I'm pretty sure it's going to have an equal weight of all 10 of these. And I think the stock selection is very interesting. I think Harvest has chosen, went for diversification, chose in terms of sector, that is diversification in terms of sector, but I've really chosen the big cap stocks in the respective sectors, right? So telecom, the two biggest telecoms, Bell and TELUS. For banks, it's Royal Bank and TD. For the oil and gas producers, it's Suncor and Canadian Natural. Enbridge, the biggest pipeline. Shopify, biggest tech company, right? And even Agnico Eagle, by the way, in case you haven't heard heard of it, it's a really big cap company. It's even has a bigger market cap than Barrick. Barrick Gold. So I think it's pretty much the biggest gold producer, and then you have the uranium producer as well, Cameco, which has done really well in the last year. Obviously, there's lots of talk of nuclear and uranium, and you see the market cap is 33 billion. So all of these are huge, big cap quality stocks listed in Canada. Obviously, a little bit more Canadian focus, right? You have financials, a lot of financials and energy in here. But Shopify is there. I'm happy to see Shopify, some materials as well. So classic Canada. So these are the first 10 that are going to come out. Maybe they'll be coming out more. I wouldn't be surprised. And you have HHIC is going to be the all-in-one, right? Is going to be the all-in-one, and I'm pretty sure it's going to hold the 10 of these equal weight. So there you have it, everyone. Pretty exciting stuff. Canadian version of HHIS. The $1,000,000 question, of course. And by the way, of course, I'm gonna actually do a Q&A with Michael Kovacs next week. I'm scheduled to do a Q&A to talk about HHIS and an update. So on HHIS, I'll give you an update. I'll ask him about HHIC as well. But looking like they're expanding their single stock, the success that their single stock cover call ETFs have been having, and with the all-in-one of HHIC, same management fee. Management fee is the same, right? It's going to be 0.4 for all of these, the all-in-ones. Well, HHIC, by the way, here's a little tidbit of information, is not going to actually hold the ETFs. It's actually going to hold the stocks. So that's why you see the management fee is actually 0.4. There's going to be no double management fee or anything like that. I guess it's just easier for them to hold the stocks instead of the ETFs for now, maybe. but it's basically going to simulate like you're going to have all 10 of these, single stock covered call ETFs. So if you don't want to pick and choose, you could go with HHIC. I'm sure that's going to be the most popular choice because, you're going to have instant diversification. Or if you want to play it, if you want to stock pick, you could do as well, right? A lot of people are very bullish. They really like Shopify. I'm sure Shopify is probably going to have the highest yield out of all of them. So in terms of yield prediction, everyone, I believe this is my personal opinion, my prediction. I think the yield is going to be lower than HHIS because these are the stocks in HHIS are American. They're a lot more volatile. The stocks, and not only the stocks in the Canadian market have less volatility typically, but the options market is also a lot smaller on the Canadian side, right? With Canadian stocks especially, a lot of these stocks are not really volatile in nature, especially the telecoms, the banks, things like that, right? So my prediction, everyone, I'm just doing it for fun here. If we look at the quote of Michael Kovacs, it still says we want to deliver high levels of monthly income for investors. I think it'll be 15%. That would be my estimate and my my prediction. I think even 15% is a bit rich, but with the leverage, with the single stock, if they work their magic, they still don't want to go over 50%. They still, Harvest likes to stay at that 33% band in terms of portfolio. So I think it'll be 15%. I doubt they'll be able to push it to 20. If I see 20, I'll be very, very surprised, but I highly doubt it'll be anywhere near HHIS's 25. So my prediction, it'll be 15, maybe a little bit less, maybe a little bit more. We'll see. So there you go, guys. We have a Canadian version, if you will, HHIC coming out, Canadian version of HHIS. So we'll see what happens. See you next time.